Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. As always, I'm your host, Dave Zaegel, and we're going to kick off 2025 talking about taxes, because soon enough we'll be filing tax returns and going through all that craziness. But let's talk about tax planning overall. And I'm going to start by having a little fun and picking on the CPAs of the world. I'm sure they'll be mad at me, but that's okay. So I look at a lot of accounting firm websites, and I see that they offer tax planning services. And I can confidently say, for most of them, no, you don't. At best, you're running a tax projection for this current year. And I guess that maybe that counts for some partial credit for tax planning. But what we're here to talk about today is the fact that tax planning really provides the benefits for tax savings. So tax savings comes from longer term tax planning, not just from a 1 year at a time projection and analysis. We've seen this over and over again for many years, decades now. When people get so focused on just one calendar year, they can miss out on so many other benefits, and in some cases, not even miss out on benefits. They can screw up their future tax benefits just because they were only focused on this year and this year only. And how do I reduce my taxes now because I hate paying taxes? Really, the focus should be on the much longer term and how do you reduce the tax bill over the long term. I'll provide an example of this here. Unfortunately, we had a client whose spouse died in 2024. Not a fun time. But immediately when that happens, on our end, that's going to kick up a lot of tax planning. So while there was a lot of other stuff to be sorted out in the background, we were running projections not only for 2024, but we were looking out several years into the future to see, okay, what are the other implications going to be? And what does that mean for what we need to do in 2024 from a tax perspective? So it was not just saying, okay, let's do a 2024 tax projection and make sure we're on track with that. Yes, that is part of it. But we also had to be mindful of the fact that, okay, now they're going to go from a married filing jointly to now in 2025 and beyond, they're filing as single. Totally different tax brackets, totally different tax implications. We had to make sure that we weren't going to do something in 2024 that screwed up the future years because we were so myopically focused on just what do we do this year to bring down the tax burden. We had to look out into 25, 26, 27, and beyond and say, what are those tax years specifically going to look like, at least based on what we know about tax laws right now? We had to look at those and say, what is that going to be? And then with that perspective, with that longer term view, turn to 2024 and confidently be able to tell this person, no, we don't need to actually do anything this year. Here's why. Yes, we had done Roth IRA conversions in the past. We had gotten you into this specific position. And now because of that, and looking out into the future and what the tax impacts are going to be with what Social Security will be now, with what required distributions will be now, we can look at all that and say, okay, we actually didn't want to do a Roth conversion in 2024. But we were able to answer that in light of a much longer term view, not just what's your tax bracket this year. Yes, that's important, but we have to take much longer term view and say, here's what the taxes are going to be by not implementing this in 2024 and benefiting for the long term. Now, I know to a lot of people that sounds a little bit unusual not to do a conversion in the last year of a married filing jointly tax return, but that's the point. It was not what you would expect, but we did the analysis long term to get back to the conclusion that probably wouldn't have been our first guess. We probably would have thought, well, gee, this is the last year they get the married filing jointly tax brackets. Let's do it, load up the conversion, do all we can now. When we looked long term, that was just not the case. Wasn't the expected answer, but that was the answer. That was the correct answer. And we got to it through long term planning. So that's just one example, but it highlights the fact that the tax benefits come from long term planning, not just 1 year at a time. That's not to say you can't get any benefits from looking at it 1 year at a time, but the challenge is you can be missing out on some benefits and you could actually screw up future years. We'll see this with business owners quite often, and it's not necessarily that you're even messing up a tax item, for example. You might just be messing up your cash flow. We'll see them chasing tax deductions, and they might say, well, all right, I'm looking for a write-off this year. I'm going to buy a big piece of equipment. Okay, fine. If you need that equipment and if it's really going to help your business long term generate more cash flow, great. But if all you're looking for is a tax deduction, you just spent a whole lot of money you didn't need to spend, and you could just pay the taxes that are owed and use that money elsewhere in an investment or in paying less on future taxes somehow through retirement plans. There's so many different options. But if you're just myopically focused on, oh my gosh, I have to buy this piece of equipment to drive down my taxes this year, you're probably going to be chasing your tail on that year after year because you haven't focused long term on what are the taxes going to be over the next at least couple of years, if not several years beyond that. So when we're talking about tax strategies and different tactics, those are all awesome, but they have to be in the frame of a long-term vision if you are truly going to take advantage of the tax code, because the IRS and Congress think 1 year at a time, most of the time. They're focused 1 year at a time. We, as the taxpayers, have the advantage of thinking many years at a time and saying, what are the rules and regulations? What's my particular situation? How can we take advantage of this over the long term? Let the government narrowly focus on 1 year at a time. We're taking a longer view and figuring out what's the reduction strategy over many, many years so that we wind up paying less taxes and we can put the right tactics in place year to year based on that long-term view.